Hey y'all, it feels so good to be back. The Investor Professor is back on the mainland, and let's go over the top news and top investment developments for the month of July. So first up is GDP growth, which surged at 3%. I don't know if we're going to say surge, but that's what the news says, in Q2 of 2025, right? So we just got finished with that. So this is bouncing back from a 0.5 contraction that was in Q1. So from 0.5 to 3%, sure, GDP is growing. On the jobs report end, we've added 150,000 new private sector jobs, because you know the public sector jobs are taking a hit. That's keeping unemployment at 4.1%, and you need to double that for African Americans. Inflation eased moderately. There's core inflation is at 2.4% annualized, and CPI is at 2.7% annual. Now, if you get raises according to CPI, that means your raise was not that much. On the global front, the U.S. growth rate was revised to 1.9%, with Europe at 0.7%, and check this out, China is at 3.8 to 4.8% in terms of growth. So China is still China. On a trade and tariff front, so the EU trade deal was introduced at 15% reciprocal tariffs, replacing the expected 30%, because you know how Donald Trump likes to put those numbers high and then negotiate them down. So they're at 15% reciprocal tariffs right now, and the U.S. reciprocal tariffs leveled at between 17 and 18%, but it was slower than predicted, which is fine. Also in that development is the big, beautiful bill that I think passed before I went on vacation, and that had a lot of sweeping tax cuts for the rich and incentives in there. So that is kind of boosting corporate investment, because now the rich folks are riching. When it comes to market mood and investment behavior, while I was on vacation, of course, every day I'm checking my stocks, and honestly, things were not that bad, right? Let me know what you think. How did your stocks do at the end of July? What we're watching for next is the Feds have another meeting, but they're actually set to keep the interest rates at 4.25 to 4.5. So they're probably not going to change things, but some big key triggers to watch out for are the monthly jobs report, the corporate earnings for corporations that you are currently investing in, and anything that has to do with the tariffs, because we should start feeling more of an economic impact into September. It's a pleasure to be back with you guys. You know what to do. Like and follow and share. Reach out to me with any questions you have. The Investor Professor 25.